Ever wondered how Donald Trump managed to rake in millions through savvy tax strategies? Well, ponder no more. Today, we're going to lift the curtain on 5 powerful tax strategies that the business tycoon himself, Donald Trump, has used to accumulate his wealth. Now you might be thinking these strategies are probably only suitable for billionaires like Trump. But you'd be surprised to know that these strategies aren't just for the 1%. In fact, they can be incredibly effective for individuals at all income levels, especially for those of you who are self-starters, innovators, and entrepreneurs. Imagine learning how to maximize your earnings, keep more of what you make, and grow your wealth by understanding and leveraging the tax system, just like Trump. Sounds exciting, doesn't it? Well, that's exactly what we're going to explore today. So buckle up and get ready. Stay tuned as we delve into these strategies one by one. First off, the power of tax deductions. It's no secret that Donald Trump, like many successful entrepreneurs, has leveraged tax deductions to minimize his tax bill. One of the most potent tools in this strategy is the deduction for business expenses. Now, what exactly are business expenses? These are costs you incur while running your business. Everything from office supplies to travel expenses to the cost of your home office. The IRS allows you to write off these expenses, reducing your taxable income. The lower your taxable income, the less tax you pay. Simple, right? Let's dive a little deeper. Donald Trump, throughout his career, has been a master of this strategy. He's deducted everything from legal fees to property depreciation, effectively shrinking his tax bill. And while you may not have a real estate empire, the principle remains the same for all entrepreneurs. Take, for instance, your home office. If you use a part of your home exclusively for your business, you can deduct a portion of your home's expenses, like utilities, rent, or mortgage interest. Or consider your car. If you use it for business, you can deduct expenses like gas, maintenance, and depreciation. The key here is record keeping. Meticulous documentation of your business expenses is crucial. It would be best if you kept receipts, invoices, and a detailed log of your expenses. This record keeping not only helps you during tax time, but also comes in handy in case of an audit. But remember, not all expenses are deductible. Personal or capital expenses, for example, are typically not deductible. Always consult with a tax professional to ensure you're not crossing any lines. So, whether you're deducting a box of pens or a business trip, every deduction counts. Every penny you spend on your business is a potential deduction, and every deduction is an opportunity to lower your tax bill. So remember, every penny you can deduct is a penny saved. Moving on to strategy number 2, leveraging real estate for tax benefits. You might have heard the saying, as safe as houses. Well, when it comes to taxes, real estate can be not just safe, but smart. Now let's take a leaf out of Donald Trump's book. We know that he's made significant investments in real estate throughout his career. But beyond the potential for profit, these investments have also provided him with some substantial tax benefits. Let's start with depreciation. When you buy a property for investment, you're allowed to deduct a portion of its cost each year as a depreciation expense. This is based on the idea that the property is gradually losing value over time. But here's the catch. While your property might be appreciating in value on paper, it's depreciating, and that depreciation can be deducted from your taxable income, reducing your overall tax bill. Next up, we have the mortgage interest deduction. If you've taken out a mortgage to buy your investment property, the interest you pay on that loan can also be deducted from your taxable income. This is another way that real estate investments can help to reduce your tax bill. But here's a word of caution. These strategies require significant investment. It's not a game for those who are risk-averse or looking for a quick win. Real estate is a long-term game, and the benefits are seen over years, even decades. That being said, if you're prepared to make the investment, the potential tax savings can be substantial. Not only can you potentially make a profit from the appreciation of your property, but you can also reduce your tax bill in the process. So, whether you're a seasoned investor or just starting out, consider real estate as part of your tax strategy. It's a move that can pay off in more ways than one. Investing in real estate can be a game changer when it comes to your tax bill. The third strategy is all about playing the long game. When it comes to making millions, sometimes the key isn't in the quick flip, but in the patient hold. You see, it's not just about making money, it's about keeping it. And one effective way of doing that is by holding on to assets long-term. Let's take a page out of Donald Trump's playbook. As a real estate tycoon, Trump knows a thing or two about holding on to assets. After all, buildings aren't built in a day, and neither are fortunes. By holding on to his properties for years, even decades, Trump has been able to benefit from lower capital gains tax rates. Now, how does this work? Well, in the United States, the tax rate on long-term capital gains is significantly lower than the rate on short-term gains. This means that if you hold onto an asset for more than a year before selling it, you'll be taxed at a lower rate than if you sold it within a year of buying it. This strategy is particularly beneficial for entrepreneurs with a long-term investment mindset. By holding on to assets, whether they be properties, stocks, or even businesses for the long haul, you allow your investments to grow and compound over time. And when it's finally time to cash in, you're rewarded with a lower tax rate on your gains. But remember, this strategy isn't about hoarding. It's about smart, strategic holding. It's about understanding the market, knowing when to hold and when to fold, and having the patience to stick with your investments through the ups and downs of the market. So, if you're an entrepreneur looking to make millions, consider the power of patience. Consider the benefits of holding onto your assets long-term. Not only can it result in larger returns over time, but it can also result in lower taxes when it's time to sell. Patience truly is a virtue, especially when it comes to taxes. So, play the long game, and let your assets work for you. After all, as the saying goes, good things come to those who wait. Strategy number 4, using losses to offset gains. It might seem counterintuitive to celebrate losses. However, when it comes to tax strategy, losses can be your secret weapon. You see, a financial setback in one area can effectively reduce your tax liability in another. This is a tactic that has been effectively employed by none other than Donald Trump. Let's imagine for a moment, you're an entrepreneur with a diverse portfolio. Some of your ventures are thriving, while others are struggling. Now, instead of viewing those struggling ventures as a negative, consider them as an opportunity. The losses from these ventures can be used to offset the gains from your successful ones. This essentially helps balance out your tax bill. It's like a seesaw. On one side, you have your gains, and on the other, your losses. When one side goes up, the other comes down. In the realm of taxes, this can be a very good thing. By using the losses from some investments to offset gains from others, you can reduce your overall tax liability. Keep in mind, this isn't about making bad investments intentionally. It's about making the most of the situation when things don't go as planned. It's about turning a sour situation into a sweet tax deduction. So remember, when life gives you lemons, make tax deductions. Last but not least, strategy number 5, hire a tax professional. Now you might be thinking, I'm an entrepreneur, I can handle my own taxes. Well, let's take a moment to think about that. Even the most successful individuals such as Donald Trump have a team of tax professionals behind them. Why? Because tax laws are complex and ever-changing. It's a full-time job just to keep up with them. Now imagine trying to run your business, keep up with tax laws, and find ways to maximize your tax savings all at the same time. Sounds overwhelming, right? That's where a tax professional comes in. They're not just number crunchers, they are advisors, strategists, and an essential part of your team. They can help you navigate the labyrinth of tax laws, identify potential tax savings, and help you strategize for the future. They provide an invaluable perspective, one that could save you thousands, if not millions of dollars in the long run. Just like Donald Trump, you too can benefit from the expertise of a tax professional. It's not about how much you make, it's about how much you get to keep. And a good tax advisor can help you keep more of your hard-earned money where it belongs, in your pocket. Don't underestimate the value of professional advice. And there we have it, 5 tax strategies used by Donald Trump to make millions. We began with the power of tax deductions, a method that can significantly reduce your tax liability and increase your net income. Next, we explored the myriad tax benefits of real estate, a sector Trump has famously capitalized on. We also discussed the importance of holding assets long-term. This strategy not only allows for capital gains tax advantages but also fosters financial stability. Then we delved into the tactic of using losses to offset gains, a strategy that can turn a seemingly negative situation into a positive outcome. Finally, we highlighted the essential role of a tax professional. With their expertise, you can navigate complex tax laws and take full advantage of potential savings. Apply these strategies wisely, and you too could see your wealth grow. For more videos like this, subscribe and turn on the bell for all the latest content from Money Masters. Until next time, keep strategizing your way to success.